Hi, my name is Eng Tang with Touzi Capital. I'm excited to present our sixth latest and greatest Bitcoin mining fund. I'll be joined by my good friend Ryan McKenna from McKenna Capital to present this investment. Thank you. And I appreciate everyone's time. My name is, again, Eng Tang, with CF founder of Touzi Capital. We're going to go through this deck with the assumption that people know Bitcoin and Bitcoin mining. That's not going to be the case, of course, for everybody. So I'm going to welcome Ryan, who knows a lot about Bitcoin mining and Bitcoin, to act on your behalf as I go into this presentation. So it has been troubling times in the market. Crypto is down, Bitcoin is down, equities are down. And when I see that happen, I think Ryan, the old adage, when there's blood in the streets, I think that's the right time to buy it. And I've been looking around for deals, and deals have been coming to us because we're a fairly large miner at this point. And we've been turning down some really good deals and opportunities. In fact, I was talking to Celsius like a few weeks ago, and maybe we'll do a deal with them, but they're distressed assets because people have taken loans and leverage when they were buying machines or buying Bitcoin or buying other coins at much higher prices than they are now. And that has created some financial challenges for them. And I'm excited to take advantage of those challenges for our investors' benefit and to present our Touzi Capital 6 and McKenna and Touzi's second Bitcoin mining fund, what I like to coin as the turnkey distressed asset investment. And I'm going to highlight those two words in the following presentation. So it's going to be a very short deck. We're going to go hit to this point. Welcome Brian again to interrupt me, talk about Bitcoin mining, what it is, and of course, I want this to be as conversation as possible, as informative as possible. As always, the typical confidential disclaimers. And Ryan, I think your number keeps growing. The number of deals, the successful deals you keep doing, it continues to amaze me. I always think that I work very hard, but Ryan, you're one of the hardest working people in the business. I'm an experienced investor myself. I've been investing since 2009 in real estate, buying my own properties, and been snowballing. And I've also been in Bitcoin since 2013. And I want to highlight that while this is, yes, about Bitcoin, I love cash flow. I love tax advantages. I love investing for cash flow and that predictability. Sometimes not predictable, but that monthly cash flow. And I think that's why I really like this type of investment, because it feels fairly familiar to me. I know, Ryan, I know you feel the same way.
Yeah, it really hits on all the characteristics that we would look for in a real estate syndication. And you've got the cash flow, you've got the upside play, the tax benefits. And I think where we're coming in on this opportunistic play, we've taken some of the risk out of the picture here. And there's always risk in every deal we do, but you'll see as we go through here what the terms are and why we're so excited. And like you said before, sometimes when there's blood in the street, you got to take advantage of that. And this is one of those opportunities we really believe in, that we think we're coming in at a great time, and we think it'll be a really great deal for investors.
Yeah, I certainly think so. So let's jump into the investment. So what this opportunity is really to acquire miners that are online now. What does that mean? Meaning that when you have a miner, it's such a big, heavy, noisy, loud, hot supercomputer. And it does one thing and does one thing. It solves a mathematical equation that ultimately gets you Bitcoin. I'm not going to go into the mechanical and technical details of that, but when you send Bitcoin to anybody, just like the Visa network, a computer, an ASIC miner is validating that transaction. And it gets a little tip, and as part of the blockchain, it gets a reward. So we want to participate in that, and we have been participating in that with several other thousand miners. And these miners need to be plugged in to be online and to be hashing, is what we call producing Bitcoin. The great thing about this investment is that they are online now. They've been online for several months. And so they've worked out the kinks of it. When you have new miners on, you got to make sure that you plug them in, you got to get electricity in, you got to get all the contracts ready and everything. These are turnkey assets. Imagine buying a turnkey real estate. You might be paying a little bit premium, but you lose all the headaches. In this case, we're not paying a premium, we're paying a discount, and we're getting the benefits of a turnkey asset. So we're acquiring newest generation S19J Pros at a very distressed asset price from gem mining. And we'll go into them in a little bit. And we're assuming an existing very low energy contract from Core Scientific, a tier one best-in-class data center. And given the urgency and the parameters of this deal, and the reason why we can get a deal like this, there is a very short window to invest. I know, Ryan, you and I have sent a little bit of a teaser just a day ago. In fact, yours just hours ago to investors. I think we have a lot of momentum.
Yeah, there's significant interest already, and we haven't even shared this webinar and the full investment summary. So I think a lot of investors who have invested before or are new to this, or just who are opportunistic investors who like cash flow and want to try to take advantage of some significant upside, have found this to be attractive. And yeah, we look forward to sharing more. But this type of deal, compared to the previous ones we've done, there is only a certain amount of miners that we can acquire. Whereas in the past, we had an open-ended fund where we could raise more money and buy more miners. This we expect to fill up just because of the terms of the deal and the number of miners that we can get from gem mining.
Yeah, and so let me get into the details there. We're essentially buying these machines for $3,300. Amazing price. They bought the machines for $9,500 earlier this year. In fact, they bought it in 2021, paid for it throughout 2021, and then they arrived. And then they had to wait some time to clear customs, and then wait for the facility to get online. All the typical stuff that happens when you acquire miners and get into mining. And that's very typical. Yeah, go ahead.
Oh, I just wanted to say too, just with our previous funds, this is what we had to do. At that point in time, we had to order the miners, we had to find a data center, and that's just how things were. And there was a waiting list to actually get access to a great data center. And we've experienced this, what gem mining is going through. And so this is maybe one difference between the current opportunity and previous funds that we've done. So I just wanted to highlight that as.
I also want to highlight that this price per unit for these specific type of miners, you could go on, say, Compass Mining, welcome you, it's great partners of ours, and pay 25% more for the miners. And they won't be online for probably a month or two. And I know where they're online, they're actually the same facility as us, so already with bated breath. And their also cost to mine and their OpEx cost is also 20 to 30% higher, because I know how much they want to charge on that side, because energy prices is up. And what we're getting is the best of both worlds. We're getting price of today, a very heavily discounted price based on today's price of Bitcoin and economics of Bitcoin mining. Yet we're getting the OpEx, the hosting costs, the energy costs of yesteryear, of last year, when there weren't as much people looking to get into Bitcoin mining, where people building these 100 megawatt facilities, where there's strains on the grid, where the war in Ukraine is not happening, and the energy prices and all things aren't happening, and inflation is happening. Last year, there was more abundance, and you could get a contract for cheaper. In fact, our last fund, we signed that contract in Q4 of last year. And I keep getting offers, one from Celsius, in fact, to acquire our contract because it's such a great contract for several $1 million. So part of this is, yes, buying really cheap online miners. That commands a premium by itself. But the second part, and stuff that I love a lot, is that we're buying a very cheap contract that is grandfathered into a price point that you could not get right now, even if they were available. But I want to talk about gem mining a little bit as well. Gem mining is a very large miner. They're actually the largest client of Core Scientific, and I'll go into Core Scientific in the next slide. They have 32,000 miners, 1.6 exahash. That sounds like big numbers. What is exahash? Essentially, they make a lot of Bitcoin, and they are selling because they have an urgent need to pay down an existing loan at the end of August. I've negotiated with them to give us a few more weeks to close our deal, because if they are able to do that, they have provisions in the loan that saves them a ton of money. So imagine if you assume a loan, you buy property from another person, you might want to assume the loan in that case, right? You don't want to pay a prepaid penalty. In this case, where they have an interest penalty if you don't pay down the loan by a certain time, which amounts to several $1 million. So they end up buying, and that's how we're able to negotiate these prices. In fact, they wanted $4,000, which is probably market for used miners, but because of the bind they're in and the ability for us to close, we're able to get an amazing deal. And one thing I also want to share is, so Gem Mining is managing 32,000 miners. We're acquiring roughly 4,700 to 5,000 miners. And we do have the ability to buy a little bit more, but overall, they just need to sell enough to pay down the loan. But they're also in the process of filing S1 draft to go public. And I don't want to talk too much about this because it's an option that we don't have to participate at all. But essentially, if they do public, this specific entity, the fund, could tag along and participate. And I don't have any additional details on that, but it does present another potential option. And when it comes to Bitcoin mining, my goal has always been to acquire as much Bitcoin, send Bitcoin to you guys, and for us to out profit. But obviously, you want to make the best financial decision for everybody. And when you get a very nice multiple, you might not want to say no to it.
And one point on gem mining, if you could just elaborate on, I know we're getting some of their distressed assets, but as a company, they're not in a distressed state, correct?
No, they're not in distressed state. So they make more than enough money to pay down the loan, pay the loan. It's just that there's a provision in the loan that is materially more expensive for them to continue the loan than for them to sell the miners to us and capitalize and pay down the loan themselves. So after they pay down the loan, they will be clear of any obligations. So that's where our leverage comes from.
Great.
And I also want to highlight that I have opportunities to buy miners for around the same price. But if you don't have hosting, if you can't get a miner online, plugged in, hashing, I have literally thousands of miners in a warehouse right now, thousands of miners in the container right now that is just sitting idle, not mining Bitcoin, not making money every day. These are money printing machines, and they're used to. So I love the fact that we are essentially being hosted at Core Scientific, #1 hosting provider for Bitcoin mining in the whole world. They also a self-miner. They took it back recently, valued at multiple billions of dollars. They mine more Bitcoin in the first half of 2022 than any other of these big public companies. So when I say tier 1, tier 0 is typically what most data centers are, most Bitcoin mining data centers are, because they're essentially containers. Tier 1 means that you have essentially a closed environment loop. So you get a little bit better maintenance over time. A little bit higher cost, of course. And so Core Scientific, we're contracting with Gem Mining last year for a significant amount of miners. And in fact, the loan is actually with Foundry. So all these big players interacting with each other. And here comes McKenna and Touzi to swoop in because the one missing link here is capital at this point. 3 things make up the economics of Bitcoin mining and drive Bitcoin mining. One is miners. So last year, there were a shortage of miners, and then they popped supply shortages and everything with silicon chips being, you couldn't even buy a Tesla or F-150, whatever it is, without a chip in it. It all comes from Taiwan, and the chip then gets installed into these supercomputers. And I think some of those has been resolved. Miners are now more plenty. The second pillar is hosting/power. You need to plug in a miner into an energy source, a hosting, we would call hosting, to essentially get them online and mining Bitcoin. And beginning of last year, before China essentially banned Bitcoin mining, it's fairly abundant. You could get them for around the same price, not that much cheaper. But then as Q3, Q4 hit, when China banned Bitcoin mining, everyone went away from China. Everyone went away from Russia early this year and went to the one stable location that had abundance power, America. And we're perfectly situated to take advantage of that. Now, that means that there's such a significant supply shortage that people are paying 6 months deposit. They're paying $5 million just to get the rights to host the miners. And so even if you wanted to get a new contract with Core Scientific, which is a tier 1 data center, it would be 8.5 cents. And what that means is a 32% discount on our OpEx. But it also means that you couldn't even do it. I checked, by the way. Check the availability. They don't have availability for this size of for even smaller size until a year away. A year is a lifetime in crypto, and we're going to be mining a lot of Bitcoin during that time. So 2021 vintage hosting contract locked in before the pricing increase due to supply shock and energy price surge. And what I also like is that it's 97% carbon neutral. Why does that matter? It matters because there are obviously risks with Bitcoin mining. The biggest risk is price risk, but regulatory risk could present a factor, and being this percentage of carbon really alleviates a lot of that.
And one other thing too, just to mention, you talk about the demand here and just the backlog to get access to the data center sites here, the hosting sites. And this is with Bitcoin that's taken a beating lately. And I think it shows that the forward thinking, a lot of these smart people and the firms, they're trying to plan ahead. And we all believe that we're going to have a nice run in Bitcoin at some point. People are lining up trying to get access. And here we have this phenomenal opportunity where it's turnkey and we can get in right away and really bypass that waiting period and those additional costs that it would take if we were to start new right now. So I just think it's important to know that there's a ton of demand out there and we're just swooping in under the radar and really putting ourselves in a great position here.
Yeah, people are still spending tens of millions of dollars into Bitcoin mining. And that's the last pillar of Bitcoin mining, which is capital is abundant last year. And you have profit margins of 50, 70, 80%, which is what Touzi Capital had in their earlier funds. Everyone was just trying to get Bitcoin mining. That drove ASIC prices up, that drove prices up and up and up. And because there's so much capital and you could buy them for $10,000, still make a great return. You can make 3, 4, 5% a month at that price of Bitcoin. So it was from an economic decision, they didn't make the wrong decision. They just didn't see that Bitcoin could crash this much. But when you come down to it, when you have low cost energy and your cost basis for your CapEx initial buy is this low, you're profitable at this price. You're profitable at $10,000 per Bitcoin. You know, if Bitcoin was $12,000, not great. Some funds would be underwater. We would still be providing 1% monthly returns. I mean, that's spectacular.
That's
better
great.
than my other investments.
Yeah. And Ang, one other important piece is the energy cost here. And can you just maybe elaborate a little bit more on what is the term of that and is it fixed?
Yeah, so it's fixed term until 2025. And then we have the option to then renew. So I think there's a lot of what I'm trying to do is ensure we get mining as fast as possible as online. And we're working very hard, me and Ryan behind the scenes, to ensure for our other funds as well. But the important point is there's a halving event. So there's 21 million Bitcoin that will ever exist in the world. And 19 million has been mined. Every 10 minutes, one lucky miner gets 6.25 Bitcoin. And 3 years ago, or two years ago, that was double. That was 12.5 Bitcoin every 10 minutes. In 2 years, what we call halving, so every 4 years, this goes down by half. There'll only be half of that. I can do the math right now. It's 6.25 divided by 2, 3 point something, 3.125, or is it something that is essentially going to happen around May or June it's what most people predict is based on the algorithms of 2024. So the value of mining now is so significant. That's why a lot of people are still trying to get online miners. There are tens of thousands of miners in warehouses collecting dust as paperweight. Very expensive money printing machines without energy contracts, without energy to plug them in.
Hey, Ang, one other thing I just think it's important for investors to know and understand. With these pools, we're all sharing in the mining of the Bitcoin. And just maybe how does that work exactly where we can earn daily Bitcoin and share in that so we're not dependent upon just our machines? And you might be hitting on this in a little bit, but I just thought it was important for investors to know how that works.
Yeah, it's a great question. So we're partnered with Found, the company that actually is owed the money. So it's funny. So we're all working in unison under the deal right now. And they're the largest pool in the world. What a pool is essentially is just a bunch of miners, my miners, your miners, everybody's miners, collectively agreeing that whoever wins that lucky 10-minute lottery shares it across all the miners. And what you share is based on how much computational power you provide. Foundry represents roughly a quarter of the world's hash rate, which means that every 10 minutes, they have a 25% chance of getting 6.25 Bitcoin. And so when you're in such a big pool like that, your variability, your variance for earning Bitcoin is so little. Basically, it's marginally different by 1 to 2% every day. And so you plug into machines. As soon as they're plugged in, you put on a program, and then that program allows you to then get Bitcoin, get into your wallet at basically at the minute it's plugged in. And that's how Bitcoin mining works. Some miners actually do play the lottery, and I've heard some solo miners win back in the days. Yeah, obviously, but they could not win ever in the life based on the scale of industrial mining nowadays. And I'll get back to this in a little bit. I do want to highlight that while we have some great sites in different states, I'm always monitoring the regulatory environment of each state. And then there are rolling blackouts that happen in different states as well, especially with heat waves and whatnot. And that does cause miners to go down. Now, oftentimes that's a curtailment, meaning that when energy prices up, you want to actually sell the energy back to the grid because it costs more to do that. It costs more to mine Bitcoin than to do that. So what I like about this deal also is that we have diversification. It's not all into one location. It's in North Dakota, it's in North Carolina, it's in Texas. And so all great friendly states for Bitcoin mining, and they have significant resources there already. And beautiful data centers, tier 1 data centers. When I say tier 1, it's a building. It's an enclosed building. It has great airflow, ventilation, has great heating, and cooling is very important because these run very hot. They run at 80 to 90 degrees Celsius, very hot. It's 150, 170 degrees Fahrenheit. And North Dakota is very cold sometimes, so great place to be sometimes. Of course, energy, why people go to Texas because you have great energy sources with renewable energy, and it's probably in Texas as well. And so that's the investment. That's the opportunity. Why? I'm going to turn a little bit and talk about how does this all work? Why? Okay, we're going to buy these miners. Great. We're going to get a discount. Great. We're going to get a great discount on the price of the miners. We're going to get a great discount on the price of the energy. So cheap CapEx. Great. What does it mean for you, the investor? It means that every day we mine Bitcoin, it goes into a wallet, and then every month, you as investor, it's an option, and I think this is a great thing, and it's a little complicated for us to essentially receive your returns in Bitcoin or cash. So every month we sell enough Bitcoin to pay for expenses, and that's a very imperative thing. We're running as a profitable business, and it pains me to sell Bitcoin at 20,000, 21,000, 20,000, but we're still profitable at those price points. A profit margin might not be 75%, might be like 40% in this case, 50% in this case, but it's still profitable. So we want to make sure that that we're running a profitable business, and our profit margins are great even at 10K. So that's how the fund manages. When you invest, shortly after you receive an onboarding to investor portal where you can add your wallet. We have resources. Me and Ryan have done a great webinar. I think we should update that, given light of everything within the market, on recommendations on what wallets are and what to do. Or if you don't care about Bitcoin at all, guess what? It's just monthly cash flow, right? Bitcoin it has a market price, but we can also just sell it for you and then send you cash. If you don't care about Bitcoin at all, it still is, if I look at it as a cash investment, it's still an amazing investment. You're getting a very high monthly percentage return every month. And so this goes back to why I love Bitcoin mining. It feels very much like real estate. You buy it, you get cash flow, you get rent, you get pay expenses, you have an NOI. The NOI then pays the investor, and you use that to then compound and grow and invest in other things. But instead, in this case, that one of the outcomes of that is Bitcoin. And of course, Bitcoin goes up, you actually make more money because our fixed cost is a fixed cost. So at today's price, we have a very healthy margin, which I'll show you what the returns look like. But at a higher price, it goes even better. The other reason why I love real estate is the tax benefits. And I know many of you guys are real estate investors who invest in real estate, but I want to highlight the appreciation and the value of it. When you invest in one of these private funds, you get a K1, a partner tax return. That tax return will likely highlight a significant paper loss, even though we actually sent you money. You would have actually shown, oh, I didn't have to pay any taxes on that because it's deferred using this essentially cashless paper loss that will offset the income you receive from this investment and any other K1 passive investments that you have with McKenna or Touzi or anyone else. So oftentimes I have used depreciation and accelerated depreciation, meaning that basically instead of waiting for that depreciation to happen, I'm going to accelerate all at once. And in 2022, it's the last year you can take it at 100% bonus depreciation. I think an amazing opportunity. And because 90% plus 90% of your investment is going towards this hard asset that's depreciable, you can get an outsized K1 loss. In fact, in our third fund, we were able to do a K1. We weren't mining to the end of the year, and we were able to give people 95, 96% K1 loss. So you invest $100,000, you get like $95,000 losses. Amazing loss, people loss. And as an investor, I think I appreciate that.
Yeah, a lot of investors have been asking, especially knowing that the bonus depreciation is going to go down next year, and looking for great opportunities where you can take advantage of that. And on top of it, you have a solid cash flowing Bitcoin mining deal that also has some significant upside. So it really encapsulates some of the characteristics we would really to see in a deal, and in a way feels supercharged because of the bonus depreciation we get here on top of what we're projecting right now with the month-to-month cash flow.
And the great thing about depreciation is that if you don't use it, you don't lose it. It gets suspended to the next year. It's like a piggy bank of losses that offsets, shelters your gains. And maybe one day you have to pay taxes on profits, but hopefully you're investing it. And as somebody who has been investing in real estate for a while, my effective tax rate on my investments have been in the low single digits. And I live in California, guys. So I'm using I can live in California still. I haven't moved to Puerto Rico or somewhere else because it's great weather at San Diego, but also I'm an investor, and I know that you guys are as well. And as an investor, it's funny, like some people invest in different investments just for the tax benefits. They don't expect any much returns. It's great tax benefits. There's also really great cash flow, amazing cash flow. I'll highlight it in a second. Some people people invest just for the cash flow, and they don't expect tax benefits, or maybe they don't expect really high potential returns. I think hopefully most people are investing here because they also believe in Bitcoin, and there's a high potential for return. And you don't invest for something that has a high potential return and expect cash flow and tax benefits. So it's a trifecta of just what I would seek as an investor. That's why me and Ryan started this whole thing. We wanted to do this ourselves. We're investors of Bitcoin mining ourselves. We're investors of Bitcoin. We're investors of cash flowing assets. We're investors using tax depreciation to the best of our ability and legally to offset our taxes and defer it to the future. This hits all the marks. And given the low cost of mining, I think we want to highlight that it's $10,000, which is possible because not only do you have this really low energy cost, but you have this really energy efficient miner. And there's always this trade-off between buying energy efficient miners and essentially more value oriented miners. They have lower energy efficiency. And when Bitcoin price is at 50K, it actually makes a lot more sense to buy those value oriented miners, because if your cost of mining Bitcoin is 15K or 10K, it doesn't really matter. It matters, but it matters less when Bitcoin's at 50K. When Bitcoin's at 20K, now you want to make sure your margin is protected so that you're profitable. So I would not buy any other type of miners right now, given today's price. And if I had the option to host with Core Scientific, which I don't, because they don't have any space, with these specific miners, I don't know if I would do that because it would be expensive and our profit margin wouldn't be that high. So those parameters make this deal especially juicy, and why I'm very excited to present it. And speaking of excitement, I want to highlight some projections. Of course, these are based on our modeling of Bitcoin price. And I want to highlight two things, and two things you should care about going forward as an investor. One, Bitcoin price. Hopefully you don't follow it every day. It can be nerve-wracking if you're not used to volatility like I am. As someone who's held Bitcoin since 2013, it goes up and down. And that's why we do distributions monthly. I think dollar cost averaging, right? Bitcoin price will affect the performance of this fund and any Bitcoin mining related funds. Difficulty is another factor. And I want to highlight that. What is difficulty? It's basically a measure of competition. If me and Ryan were the only people mining Bitcoin, we had two miners, me and his, but we'll take turns getting 6.25 Bitcoin. I'd be happy. And then another miner comes in, another person comes in, there are three people. Well, it's a zero-sum game. There's no more Bitcoin that can be mined. In fact, that's the beauty of Bitcoin. It's finite in nature. No one can print trillions of dollars of Bitcoin. It's all coded into with this finality that people see as a potential reserve asset, digital asset. So difficulty increases when prices go up because it's, hey, I can go in this little game of Bitcoin mining and I'm gonna make a ton of money. Great. If enough people do that, it's a zero-sum game, then people will make less Bitcoin. So that's what's been happening over the past 2 years. And on the other side of things, when Bitcoin goes down, some people think, oh, it's not making so much money anymore. I don't know if I should be in this, especially if they have energy inefficient miners, older miners, like 5-6 years old miners. And I have some, but I'm hosting them essentially in a very low cost energy market to tell you one day. And the other thing is if you're essentially, so when energy prices so Bitcoin price goes down, you actually have difficulty go down. That's something that we do want to monitor, or we will report to you guys. Don't have to monitor it. It's something we can't necessarily control, but it does affect the projections. And to the best of our ability, we projected, modeled out all the experts we could attend to it. And I want to highlight some here. Let's take conservative flat model. Very unrealistic. Bitcoin is never going to stay flat 5 years. It's very unrealistic. And difficulty is not going to be held constant. Because if Bitcoin was flat for 5 years, people would stop mining Bitcoin. And that's just a fact. It's just people are still mining Bitcoin because they took leverage. So they may be underwater because of that, not underwater because of mining. And if Bitcoin does not rebound there shortly, I think they might be more danger. Maybe some really good opportunities in the future as well. 20,000 Bitcoin, 20,000. We're slightly above that now. You're making close to 4% a month, in 1 month. Now, this is given difficulty constant as of today, August 25th. Keep that in mind. And if you bought Bitcoin and Bitcoin went to 20,000, you'd be losing money, of course, based on today's price. But guess what? Over 5 years, you're making money. You're making 1-to-1. And I can multiple. And that's okay. It's not great. There's some risk to that, of course. Hey, should we trust these guys? What's happening? Any investment has risk. You're getting depreciation benefits as well. So your IRR is actually increasing because of that. So we calculate that depreciation benefit based on a federal tax rate of the highest federal tax rate, not California tax rate. And so the return capital is not very good, but still shows you that it's a very resilient, very economical investment at 25,000. And by the way, last week it was 25,000. And I was very excited about it. And the lucky thing is that as we start negotiating more and more, we get the price down on the miners because the price down in Bitcoin. And I think we're mining the 25,000, you're making 5.7% in the first month, given everything constant. And the equity multiple is significantly higher. How does essentially a 20% increase, 20% increase in Bitcoin price does that much of a difference? Because our fixed cost is a fixed cost. This is a leverage bet into Bitcoin. Leverage meaning that if Bitcoin goes up 10%, your returns go up way more than 10%. And it shows in this, obviously, Bitcoin goes up 25K, difficulty is not constant. These scenarios are just to highlight what it is in the near term and potential what it is as sort of the overall project. Not necessarily shows realistic. 30K, you're seeing a much higher return, 40K, 50K, amazing returns. Last year, when Bitcoin was at 40K, and difficulty was much lower, our first fund were delivering 11.8% at its highest in October. I miss those days, 85% profit margin. And I bought those miners at $10,000. More energy inefficient miners, older miners, $10,000 per miner. Now we were returning 11.8% to investors in 1 month, not a year, in 1 month. We were doing 10%, 11.8%, 9%. We're down now. We're still returning returns. It's in 2 to 3% range, but that's really highlighting that it matters where your cost basis is on your CapEx and your OpEx costs. And of course, it matters that you're mining now. And that's why we're working very hard to make sure everything's online. And that's why I love this investment. So the blue sponsor outlook, this is my expectation of Bitcoin. And I muted my expectations of Bitcoin just to get to market reality. If you ask me, I would probably never sell Bitcoin. I would probably think it's going to go up and up. So I'm probably the wrong person to ask about what happens when, did you think the downside? Yes, we have downside, but in the scenario that I think realistic is very possible, Bitcoin goes from today's price of 22K as today's recording to 50K in 12 months, then adds another 35K into year two. It could be up and down. It could go to 100K. It was like 66K a few months ago. So I'm not even saying to get to that level. I'm saying in 2 years, get to 85K. Literally a 20% increase from its highs. That's, if you follow Bitcoin, that's, yeah, maybe conservative. It's, I don't want, but I want to highlight what the model will look like. And I want to highlight that in this blue and red, I'm also increasing the difficulty, which is why the returns don't look as, it's so different than the flat models. It's just very unrealistic. When the price goes up, difficulty goes up, meaning more competition happens. And so I'm accounting for that. I'm accounting for the halving event. We're taking half of we're getting half of production after May 2024. So we want to be buying now. And after that, typically you do see an increase in price, but we want to be buying now. But I'm not taking that into account. 14 months return on capital, amazing IRR on both without depreciation as well with depreciation. And this is with you selling Bitcoin every month. This is with you selling Bitcoin every month, which allows you to essentially, if you did keep your Bitcoin, you would actually get more money. So this is actually one of those things where you're getting a lot of benefit without research the dog house happening. Like if you were selling Bitcoin at 20K, at 30K, 40K, and then on the downside scenario, you're essentially looking at Bitcoin starting at 22K, going to 11K over 5 years, and you selling it every month. What happens if you bought Bitcoin and went to 11K or by half? You would lose 50%. But in this case, if you sold it every month, you sold it at 22K, sold it at 21K, sold it at 20K, and you're still making the first month 4.6%. Right? If Bitcoin was 22K in September, at the end of September, and we had a full amount of mining, we would return distributions of 4.6% to investors. And if you held on Bitcoin, you never sold it, you lose half of it. But if you're dollar cost averaging it, you actually get a positive return and a very healthy positive return. It's actually very comparable to really great real estate deals that I've seen. So a lot of numbers, a lot of theory, which is backed by practical experience in mining. And yeah, I think that's why I'm so excited about this investment, that I'm just looking near term. It's an amazing cash flow investment. So what are the terms of the mining opportunity? So it's the same as the last investment, slightly different. We have 5 years of mining. Projected returns within 15 to 18 months is based on prices being where they are and difficulty going up, maybe if price goes up. Depreciation, for sure, that will always be the case for this year, especially. Monthly distributions, and then we'll do a 90-10 profit share, then return to capital, allowing us to pay for our and ensuring a great customer experience for our investors. And then investment options. So we do have 3 tiers of investment options: 50K minimum for investors, 50% profit share after returning capital, and then the other tiers being 55%, $500,000, and $1 million gets you 60% profit share to investors, same as the last one, same investments. But I also want to, and then Ryan convinced me of this one. I think I love the idea. We're introducing a founder's share for any investors who previously invested in us in our previous Bitcoin mining fund. You receive a bonus 5 point in the backend profit share. So you invested 150K, you would typically have received 50% profit share. At the end, you receive 55%. And if you invest $500,000, it will be the same plus 5 points, same with the third level, $1 million plus. So it's just really a thank you note, appreciation to investors who have stuck by it, because I know that this investment for many of you guys will seem like this is even better. And yes, you're essentially buying Bitcoin at a lower price, Bitcoin mining at a lower price, and Bitcoin could have gone up and we could have made a lot more money. I still very much believe it, and I think we will be very much in a healthy position fairly soon. But I think this is going to be one of the gem of the day here.
Yeah, and one other thing, and just to add, the dollar cost averaging down is a strategy I think some might look at as if you're acquiring certain assets and then all of a sudden they're a little bit cheaper. If you buy them cheaper, you're going to lower maybe what your initial cost basis was. And that's how we're approaching this. And yeah, the timing of this is, Obviously, we're getting a great deal here. And who knows, 2 months from now, there might be even a better deal out there. We're working with what we have in front of us. And we did want to reward other investors who invested previously with us in these mining funds. And as a way to say, hey, we're going to continue this journey together. And thought it would be nice to give back a little bit there. Glad we landed on that. And I think, yeah, we'd welcome many new investors as well. But I think we've got a good, strong supporting group of investors who believe in Bitcoin. And it's evident already with the response we've seen just with kind of the one pager that we sent out. Yeah, we look forward to seeing the interest level continue to hopefully grow.
And that's why when I really respect and I like working with Ryan, he shares the same ethos. We care about investors. It pains us when we are unable to deliver to expectations, and when we're able to get some really great investment opportunities. I think, I want the investors to win. I think this is a winning investment.
Totally agree.
Yeah, the adage is if you bought something before and you thought it was a good investment, it's a 5-year investment. Just because it goes down a little bit doesn't mean it's not a bad investment. Maybe you should invest more into it. That's what I've done with different stocks in my life, right? Hey, I like this opportunity to market dip a little bit, but more of it. Now I have a low cost basis. When it goes up, and because of my overall investment thesis, I'm rewarded with a healthier return.
Yeah.
So project timeline. So we're working very fast and hard, and I think we're going to be working pretty much throughout every day to answer investor questions. We're going to close on September 9th. We're going to have docs ready shortly, and hopefully in the next week you have plenty to sign and fund. We will be personally funding a deposit into this investment of $4 million. I know I will. And by the end of the month, which allows us to essentially lock in these prices, and then we'll fund the remaining in September 9th. And as soon as we close and finalize the deal, which we expect in mid-September, it's on 15th, within 24 hours, we'll have miners turned on into our possession, mining Bitcoin as fast as that. And for many investors who have been onboarded to our portal, you just be added the investment. But if you're a new investor, you'd be onboarded to our portal. And because we've worked out some of the kinks there, it'll be a fastest process. And in mid-October, we'll be sending your first distribution for the September mining. And then in the same thing in November, you'll be getting distributions for October mining and so on. And hopefully Bitcoin price goes up and you're seeing very healthy returns. When I first launched my Bitcoin mining fund in March of last year. Last year? Yeah, last year. And I've been Bitcoin mining for a while, but launched my first Bitcoin mining fund. It was before China banned Bitcoin for the crash. I bought Bitcoin miners for $10,000. My projection was like 3 to 4% monthly returns based on the price of Bitcoin, which actually was at 50K at the time. But when it crashed, it definitely went down. So not so much. The return just kept going up every time it crashed and went back up in price. So I like the fact that we're participating in a volatile market on the upside, because I think there's a lot more upside to be had here, especially at these prices. To summarize, our 6th fund represents a great opportunity to acquire distressed assets with amazing economics. Low energy hosting contract allows us to mine Bitcoin profitably, even at today's prices. These turnkey miners mean we will start mining next month. No waiting for logistics, no waiting for things to turn on or things to move or things to get ready. It's online now. And we have really great low CapEx and low OpEx. So this is an amazing deal all around: cash flow, tax advantages, and high potential returns. If you guys have any questions, feel free to contact me.
One of the questions that comes up a lot is, what type of reporting can they expect, and what's the frequency like for this fund?
Yeah, so we're definitely working on better reporting, but as it stands, we're doing monthly reporting, given how much we've mined, what's the cost, how much we sold it for. We try to sell it the same day we send distribution, so it's fully transparent and you can track the prices of Bitcoin. We do that every month, and we're creating better accounting and better reporting as we scale our investments.
Great. And as far as investors who might want the easy button, I know in the past we've shared various wallets that you can use to receive Bitcoin, or you can get it ACH'd into your bank account. But just regarding some investors who maybe have a self-directed IRA, or they want to have Touzi Capital hold on to their distributions until they're ready to liquidate them or cash out. So what does that look like if an investor wanted to do something like that?
Yeah, earlier this year, we actually had a earn yield option for investors, which allowed us to essentially allow investors to elect for us to invest their Bitcoin, earn a yield. We've paused that percentage yield, but we're still continue the program, essentially putting it into a very secure custodial wallet, into our own code wallet, allowing us to essentially take the appreciation of the Bitcoin, because maybe you don't want Bitcoin because you can't take it right now, or you don't know how to set that up immediately. You need to get comfortable with that process, or you're in an IRA that doesn't allow you to hold that. But you want to still participate in the benefit upside of Bitcoin, and maybe you don't want to sell your Bitcoin and get cash right now. So we're offering that to all investors.
Great. Let's see. So another question that comes up is if they want to change how they receive the distribution. Let's just say that they start out, they're like, I want to get it in ACH, but then if they want to change to Bitcoin at some point, can they do that? And how would they do that?
Yeah, that's a great question. And as the market goes up, maybe you want to sell your Bitcoin instead. My personal advice would be always just take in Bitcoin. It's easiest for me, actually. You can sell it whenever you want, but we do have the opportunity for in our new portal for you to change your wallet, because maybe you're in Coinbase, or you want to set up a new wallet, or change your distribution preference from ACH to Bitcoin, or vice versa, or anything else in between. You can do that every month.
Great. I know we talked a lot about the volatility with this investment. Obviously, we know that there's going to be some probably short term, and we're obviously very bullish long term here too. But as far as just risks in general, I know we've covered a lot, but just if you could highlight some of the risks that could come into play here, and maybe what we've done to mitigate those risks for investors.
Yeah, so the biggest risks is, of course, logistics, operations. Buying anything from China, if anyone's bought anything from China, you get generally much better pricing, especially if that's where they're being manufactured, which is what happens in Bitcoin mining. But this logistics risk, customs risk, is timing delays, stuff lay on container chips for a while. So we're mitigating those risks by having turnkey assets, and we're also mitigating the risk of holding Bitcoin. Bitcoin is a very secure network. I have never heard of any hacks if you're holding it in your own secure wallet. What I love about this investment is that it's your Bitcoin. Every month, we're not hoarding a lot of Bitcoin that people can take from us, or if something happens to one of us, grab a bit, we're sending you Bitcoin, or we're sending you cash, and for most of you guys. So I believe this is sort of the investment that I would structure to mitigate those risks. The biggest risk, of course, is Bitcoin price goes down. If Bitcoin price goes down, within our contract, we have the right to pause our mining. Why would we want to pause mining? Bitcoin price goes down to, say, 5K. That would be catastrophic, of course, but I hopefully not only temporarily. It would be more costly to essentially pay for the energy costs than to buy Bitcoin in the open market. So we would be underwater in that case. So instead, in our contract, we have the ability to pause for the 6 months. And we also have insurance covering all fire and for our miners, any other natural disasters. And the hosting sites have their own insurance, so double layer of insurance.
Yeah, no, that's great. And one more thing I'd add, with the way we structured this, 90% of the profits until the return of capital is going back to investors. We want you to get your capital back as soon as possible, just so we all limit the risk involved and increase the IRR to you as investors as well.
Yeah, I love putting investors first. I'm a long-term investor in this fund and all of our funds, and I'm always optimistic on the back end, because I know that we can deliver and Bitcoin will go to where it will go. So I'm very excited to de-risk it for investors by giving you guys the priority.
Yeah, this is great. I again appreciate the time here, Ang, and the opportunity that we have here for investors. We think this is one of those opportunities that doesn't come along every day. And so we wanted to jump on it, and we were thinking about investors. And even though we know maybe the current economic climate is tough, but this is one of those opportunities I think we're going to look back on and say, wow, this is a great deal. And obviously there's no guarantees in anything, but we're looking at everything we see out there. And this was one that we just couldn't pass up. And so I'm excited to partner with you again. And it's been great working together, and feel like we talk almost every day now, which is awesome. I enjoy, hey, we're two peas in a pod, as you mentioned too. I like to work a lot. So do you. And we feed off each other in a way. And so this is just a continuation of our relationship and business opportunities that we're putting together for investors. Thanks again. And I look forward to sharing this with our investors. Thanks
for having me and monitoring me. I really appreciate the relationship we have with you. And I really look forward to delivering great returns to our investors.
Thanks.